Let's bring back in Jonathan Golub of Credit Suisse. He's the Chief U.S. Equity Strategist there. John, we were just talking about your sort of framework and how you're thinking about 2021. To drill down into it a little bit and look at sectors, it's fascinating to me because you're overweight tech and you're also overweight financials. There's been all this talk about rotation in the market, but that weighting sort of suggests that there'll be some rotation, but not necessarily rotation out of technology.
Right. So first, you have to set your time frame for this, Julie. In the near term, I think that everything that looks cyclical should have some tailwind and look pretty good. So energy, materials, industrials, financials. But if we're looking out over the course of the next year, there are two groups that look, I think, particularly attractive that have gotten very little attention. The first one is banks. Banks are the least loved group in the S&P 500. Not only are they the lowest valuation, the cheapest stocks, but if you look at how cheap they are, even compared to their own cheapness historically, they're really looking very, very beaten up. Now, what's the good news in terms of their story? First of all, rising interest rates and a renormalizing economy are great for banks. They make more money on lending and things of that nature. Second thing is that people tend, when the job picture is getting better, they tend to pay their loans, and loan losses or potential loan losses is a really big deal for banks. If the economy is improving, people take out more loans. And finally, the banks, they do something called reserving for losses. If they think that we're going into a pandemic or a recession, they put money aside for a rainy day. And if you don't use all of that because conditions aren't as bad as they had thought, well, then they get to take that money and give it back to shareholders in more dividends and buybacks. So we think that probably come the second quarter, you're going to start to see these companies give out more money back to shareholders. And that's a lot of good news for a group that everybody wants to hate. There's unique stories in each of these groups, just like there would be in healthcare or tech or others.
Jonathan, so many of our viewers around the world, they eat, sleep, and breathe the Dow. And I know they are absolutely obsessed that the Dow has hit and now broken through Dow 30,000. Two questions here. One, should investors care that the Dow broke through 30,000? And what you're seeing right now, this buying momentum, do you think it sets the conditions for, let's say, Dow 35,000 by the spring of next year?
If the public is more, I get the same question, which is there was an announced deal, let's say, and people say to me, does company A buying company B, is that good for markets? Well, if it gets the public more excited about holding equities, sure, that would be a positive. But at the end of the day, the assets are worth something. And they don't move money. And I know that I think it was Julie talking about before about flows and sentiment and things like that. It's really simple. These are businesses. They make money and they give that money back to shareholders. And right now, the most important news by far is the fact that you've seen a tick up in the unemployment, not the unemployment, but the weekly jobless claims. Incrementally, more people are beginning to file for unemployment again. And that kind of begins to look like you have a risk of a little mini double recession. I'm not saying we're going to go there, but that news is in the real economy. The fact that there's a round number at 30,000 doesn't really particularly mean a lot. I know it doesn't mean anything to institutions, but I don't really think it means that much. But if it gets people excited, great. And that's not a bad thing.
Yes, to your point, though, obviously, if you're out of work, that trumps Dow 30,000 for your personal situation. That's a great point. Jonathan Golub is Credit Suisse Securities Chief U.S. Equity Strategist. It's always great to talk with you. Have a great holiday, John, and good to see you.